Welcome back everyone, and in today's video, we're going to discuss one of the fastest growing and most innovative tech companies on the market right now, and that is Microsoft. They are one of the leaders in the tech space, and they have been for decades. They continue to innovate, come out with new products and services, and their cloud-based business has absolutely accelerated during this pandemic. And they currently trade at a $1.74 trillion market cap, making them one of the largest companies on the planet. And many investors believe Microsoft has the best well-run business and overall may be the best company in the world. And they just shared their latest quarterly earnings, and they reported top-line revenue growth of 17% with massive acceleration in their cloud business. And in today's video, we're going to break down Microsoft's latest quarterly earnings, take a look at the numbers, deep dive on how they performed over the last 90 days, and discuss the future of this company. We're going to take a look at their financials, some future growth prospects, and as a whole discuss if right now is a great time to buy this leader in the technology space. But before we do that, I'm going to ask you to please hit the like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. So please hit the like button, subscribe to the channel for those daily videos, and today we're going to discuss this massive headline that Microsoft has just announced, 17% year-over-year growth in their top-line revenue. So if we start off by taking a look at the actual numbers. So over the last 90 days, the company reported $43.08 billion in total revenue, compared to analyst expectations of just over $40 billion. So they almost beat top-line estimates by a total of $3 billion. And for their earnings per share, they reported $2.03 versus the expectation of $1.64 for that quarter. So they absolutely crushed what analysts were expecting for an EPS estimate. And on an annualized basis, top-line revenue grew 17%. And Microsoft has been beating analyst expectations for decades. And if we take a look, over the past 12 months, the company has grown by 39%. But over the past 5 years, the share price has grown 343% overall. And their current dividend yield for this company is at 1%, and they're currently trading with a forward PE of just over 34. And one thing that's very solid about Microsoft and why people consider them one of the top companies on the entire planet is because their revenue is broken down into multiple different segments and nicely diversified across many different products. And one of the fastest growing segments of the entire Microsoft ecosystem has been their intelligent cloud products, which include names like the Azure Public Cloud, Windows Server, GitHub, and their entire enterprise services. And in total, all of those products have brought in $14.6 billion of total revenue, which was a 23% year-over-year increase and beat the analyst expectation, which sat at around $13.7 billion. And the Azure Cloud Platform, which is one of Microsoft's most popular and has the most expected growth room ahead of it, grew 50% year over year, which is absolutely insane. This is the future of Microsoft. It's one of their key products that analysts believe can expand to massive levels, and that 50% year over year growth is incredible to report and does give investors a ton of confidence. And another one of their business segments include their personal computing, which contains Windows, gaming, devices, and search advertising, which generated over $15 billion of total revenue over the latest 90 days, which was up 14% year over year and beat the analyst expectation, which was around $13.47 billion. And over the past 90 days, analysts were predicting that the operating margin for this personal computing segment would drop to only 26%. But actually, on this latest report, Microsoft reported 34.5% margin from this sector, which is well above what analysts were predicting. Although it did go down, but that ties in to the new products they released, the lower cost Xboxes, which did kind of reduce their total operating margin, but by only 5.5% and not the 14% decline that analysts were predicting. And finally, the third segment of their well-rounded business is productivity and business processes. This includes the Office platform, Dynamics, and LinkedIn, which produced $13.3 billion of total revenue, up 13% year over year, and once again beating the analyst expectation of $12.89 billion. So like we just saw, all three of the main business segments within the Microsoft ecosystem all beat analyst expectations, all grew by high double digits year over year, and continue to perform very well. And now we're going to tie in everything that we just learned from all the different business segments into the total Microsoft system as a whole. So for the latest 90 days, the company brought in $43.1 billion, which was an increase of 17% year over year. Their operating income was $17.9 billion, which was up 29%, and their net income, or their total bottom line on the income statement, was up 33% to $15.5 billion over a 90-day period. That's absolutely incredible. $15.5 billion, a 33% increase in total net income during a global pandemic, really shows that Microsoft can really operate in any type of economic atmosphere and continue to bring in high margins and grow over the long term. And earnings per share brought in $2.03, which was a 34% year over year increase. And now we're going to read a quick quote from the CEO discussing the future of the company throughout the pandemic and for many years in the future. And it reads, "What we have witnessed over the past year is the dawn of a second wave of digital transformation sweeping every company in every industry. Building their own digital capability is the new currency driving every organization's resilience and growth. And Microsoft is powering this shift with the world's largest and most comprehensive cloud platform." That's incredible. And everything the CEO has said, I believe to be 100% accurate and will lead Microsoft even farther and even higher in the future compared to where they are today. No matter what, every business is going to transition to be more digitally native. They're going to do more things online than ever before, and Microsoft is the powerhouse behind those operations, and I believe they will continue to be that leader for decades in the future. So now we're going to take a look at the current financial position of this company, go over what analysts are predicting for their future growth, and take a look at the current valuation of this business. So if we jump over to Simply Wall Street, they believe that Microsoft is actually 8.1% undervalued at this current level, and an estimated fair value for this company sits around $249 to $250 per share. So this market leader, who continues to climb even higher, is still slightly undervalued according to Simply Wall Street. And when discussing Microsoft, people only focus on the long-term share price growth that this company provides. But it is also one of the best dividend growth companies on the market right now. They have a dividend yield of only 1%, which of course is very low, but their payout ratio is only 33% of their total net income. So they have a ton of cash left over to reinvest and grow the business, plus grow that dividend for many years in the future. And they grow their dividend, averaging 10% per year growth over the past 5 years, so that small 1% dividend yield will continue to grow and compound for many years in the future. And their dividend safety score comes in at a 99, which is the highest dividend safety score possible, indicating that there is very little risk of a dividend cut coming anytime soon from Microsoft over the next 3 to 5 years. And this company continues to reward investors with a ton of capital every single quarter. And if we take a look at their actual presentation from their latest Q2 report, over the past 90 days, the company returned $10 billion to shareholders, which was an 18% year over year growth, $5.8 billion in share buybacks, and $4.2 billion in dividends. That's incredible. In a 90-day span, in one of the 4 quarters of the year, they returned $10 billion to shareholders. So although people overlook the tiny 1% dividend, you have to take a look at the entire picture. Microsoft's share price continues to grow. They reward investors with $10 billion in a single quarter, which was up 18% year over year, just shows the company's dedication to rewarding investors with as much capital as possible while maintaining a ton of future growth for the business. And now we're going to take a look at what Wall Street's analysts are saying about Microsoft. The first report shows a survey of 35 analysts recommends a buy on this company. 3 holds, 16 strong buys, and 16 buys. No one is selling out of Microsoft, and I completely understand that. Why would you sell out of a company that continues to grow at a massive rate and return a ton of capital to investors every single year? So 16 strong buys, 16 buys, and 3 holds. Over the past 6 quarters, we have seen huge positive beats on earnings per share expectations. And moving forward, throughout 2022, analysts are predicting close to 23% forecasted growth in their total top line. And like we just saw, a 17% year over year increase over this latest quarter. If they hit this 22 to 23% growth rate, I think the company will be worth much more and be at a much higher level than where it is today. And over the next 5 years, analysts are predicting 10% per year annual earnings growth. And if we take a look at this chart, also on Simply Wall Street, from where Microsoft is today, with around $147 billion of total revenue and around $47 billion of earnings, you can see over the next 5 years in the future, analysts continue to predict massive numbers. In 5 years out, they're predicting close to $250 billion of annual revenue with $82 billion of total earnings. So you can see as time goes on, they only believe that the top and bottom line will continue to expand for many years in the future. And over the next 5 years, if we take a look at Yahoo Finance, we're predicting around 14 to 15% per year share price growth from Microsoft, and I do believe that is more of a bearish expectation. They're considered a strong buy, coming in at a 1.6, and Microsoft is the second largest holding in my personal portfolio as well. I own 44 shares of this fast-growing tech giant for a market value of over $10,000, and I'm up around 21 to 22% on this position. As a whole, this makes up around 12% of my total portfolio, and I love having such a high weighting in such a solid company. And many people don't like going over a 5% weighting in one individual stock, but I feel very comfortable with this large position in Microsoft because of how strong their financial statements are. And if we take a look at their income statement, for example, year over year, total revenue continues to expand, and over the trailing 12 months, they've brought in $147 billion of their total revenue. And if we take a look at their net income or their earnings, they have massive profit margins. On $150 billion of total revenue, they have $47 billion of net income. So close to a 33% net income profit margin on this tech leader. And that's incredible. And I believe that this will only continue to expand for years in the future. And one other aspect is the balance sheet and how strong the financial position of this company really is, which is why I'm very comfortable having such a large stake of my portfolio in this holding. Right now, they have around $138 billion of cash and investments. Just think about that number for a second. They have $138 billion of cash sitting at their disposal to do anything they want. Research and development, acquisitions, share buybacks, dividend increases, future increases to their operations, anything they want. They have $138 billion of cash at their disposal. There's not many companies worth more than $138 billion in total, let alone Microsoft has a cash position of $138 billion, which is absolutely incredible. And the fact that they only continue to build this up each and every year is amazing to see. Their total current assets sit at $177 billion. And if we take a look, their total current liabilities are only $70 billion. They have $100 billion more in total current assets than they do total current liabilities. So absolutely no worry whatsoever with regard to their current ratio. And if we take a look at their total liabilities, that's $177 billion in total. So their current assets can deal and pay off every single debt or liability on the balance sheet right now, and that's only the current. If we take a look, the company's total assets sit at over $301 billion. And if we take away goodwill, which some people don't believe is a core asset, and I completely agree, and if we take away intangibles, that's still around $250 billion of total assets compared to $177 billion of total liabilities. So a very nice overall ratio on the balance sheet. And if we take a look at total equity, continuing to grow year over year, which is exactly what we want to see from a fast-growing, expanding business. You know, if you've been following the channel for a long period of time, I love examining balance sheets. The balance sheet shows the financial position of a company or the health of the business. And a strong balance sheet will allow the company to continue to operate because if they have manageable debt and strong cash and a strong current ratio, the company will continue to operate over the short and medium term with very little worry. And Microsoft has some of the best financial statements in the world. We already took a look at their powerful income statement. I love the balance sheet on this business, and I completely understand the idea that this may be one of the best companies on the entire planet, if not the best. So that was a little bit video on Microsoft today. We all know this company. If you own an S&P 500 index fund, it is your second largest holding, and it is personally the second largest holding in my personal portfolio as well, and I plan to hold this company for decades. And if they continue to post huge earnings over the next few quarters like we saw today, I believe the share price will be much higher, and this can easily be a $2 or $2.5 trillion company over the next 3 to 5 years. So thank you for watching, everyone. I am the Gen Z Investor. Every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. So of course today we talked about Microsoft and their latest quarterly report where they grew by 17% on their top line, and I believe this company will continue to grow. It's one of my largest holdings. So please let me know in the comments what you think about this earnings report, if you liked it, if there's some things you didn't like, and we'll have a discussion down below. So please hit the like button, subscribe to the channel for daily videos, and I will see you in tomorrow's episode.